Hello everyone and welcome back to the channel. In today's video, we are going to be taking a look at how we can build a stock performance analysis calculator using Microsoft Excel and evaluate the performance of a stock with respect to a benchmark. And this can be used for any other business as well if you want to compare your business returns with any specific benchmark. So it has a lot of good business application. But before we dive right into it, do not forget to subscribe to my channel for the latest of data analytics across Excel and Python. So let's get right into it. I'm going to be using the inbuilt functions from Microsoft Excel for this. So I've downloaded some data. So this is the price for the S&P 500 index downloaded from the website, and this is the price of the Apple stock. And I've got the data, the 5-year data, and this gives me the monthly price of the S&P 500 index and the Apple stock as well. So you can see this is the price for November, October, September, and so on and so forth, and I've got around 73 records which captures 5-year data. So it will give me enough time to evaluate the performance of the stock with the benchmark index. So let us see how to calculate this. I'm going to be using the natural logarithmic function. So I'm going to do ln, okay, and I'm going to divide the price of the S&P 500 index with its previous month's price. So it will give me, it shows that the monthly continuously compounded return is 5.01% with respect to the previous month. So let me drag this here for Apple stock as well, and now let me copy this down. And now you can see this gives the price of how the S&P 500 index returns fluctuate month on month, similar as compared with the Apple stock as well. Okay. The last one gives me a diff by zero error because there is no data here. I can remove this by writing a simple if statement. So let us write this here. If B4 not equal to 0, then I'll do this calculation. Else I'll just write NA. That is not applicable. Okay, close this, and I copy this formula here again. Just drag this and let us copy this all the way down. Double click here, and you can see it's gone. The last value will show NA. Now let us get a consolidated view. We have got the statistics of the price on month-on basis. Let us get the consolidated view. So let us see what is the average monthly return. This will give us a better idea of the S&P 500 index. The average monthly return is 1.14%, and this includes the losses as well, where there's negative returns here. So it's a positive return. Now let us check for the Apple stock. Let us drag this over to the right, and the Apple stock gives a better return, 2.47 monthly return. Now let us see what is the average annual return. So we are going to multiply this value by 12 and we'll drag it over here. So the average annual return is 13.66%, and you can see the Apple stock greatly beats the average annual return by having a average annual return of 29.67%. But now we also must calculate the volatility. It's one thing to have a good return or a better return, but how volatile are the prices? You would always want to invest in a stock or in an index which has less volatility, or you must also know whether the risk is fair as compared to the return that you are getting. So let us see the volatility. This can be calculated using the standard dev.p, which is the standard deviation for the entire population, because I have the entire data set here. Else I would use sample. So let us, and that is around 4.98%. That means the monthly standard deviation is around 4.98%. And what does the standard deviation generally tells you? So it tells you that means all the data points for the average monthly return will lie around 95% of the data points of the average monthly return, by the rule of thumb, will lie between two standard deviations. That means for the average monthly return, the deviation will be by plus 16 and minus 16 roughly. So all the data points will lie between that range. So you know how dispersed the data is or how volatile your stock or your price would be. Okay. Now let us do this for the average annual return, but in this case you need to multiply by the square root of 12. Okay. The formula is using the square. You can use the square root formula and multiply by 12. Okay. Now this will give an average. The standard deviation of the annual return is 17.25, and here it is 27.92. So you can easily tell that the Apple stock is more volatile, but also with the risk you are taking with the volatility, you can see the average annual return is far out beating the S&P 500 index. Now let us see the max and min values, because this will also tell us what are the maximum return I can get on a month-on-month basis. It's a good indicator for the risk that you're taking. Okay, so you can just drag this here, and let us do the min first, and then we'll format the both. Okay, let us do min now. Okay, and let us drag this here, and this is coming in red because this is a negative number. So let us format this, take the format painter and format this. So you can see here the maximum is 11.94, and here the maximum monthly return is 19.42. So again, so the range is very higher in the Apple for the positive side, and the minimum side, the negative range is fairly comparable. So the risk is less because both have given a negative return, the minimum negative return of minus 13.37 and minus 13.65. In fact, Apple stock is lower. But now we have got a good understanding on the Apple stock, on how it is beating the index. Let us see, is there any relationship between the S&P 500 index and the Apple stock? Does one vary with respect to the other? So this can be identified by the correlation. So you want to find out if there's any correlation between the two. So I'm going to copy all these values below, and let us see if there's any correlation. And then I'm going to copy the values for the Apple price. Okay, select all of that, close the bracket, and you can see there's a 0.78 correlation. Now the correlation values lie between 0 and 1. I've made a lot of videos on correlation, R-squared, slope and y-intercept. You can check that out on my channel, but yeah, I'm covering only in brief. So the closer the value is to 1, it tells us there's a high correlation, and the closer the value is to 0, there's a weak correlation. So here you can see it's 0.78. So there's a strong correlation between the S&P 500 index and the Apple stock. This tells us that as the S&P 500 index increases, the Apple stock will increase, and as it decreases, the Apple stock is likely to decrease. This depicts a strong positive correlation. Now let us see if the R squared is good or not. So the R squared would basically tell us how much of the variance in the Apple stock can be explained by the S&P stock price. So let us see, this is calculated by R squared, and I'll use this function. Again, let me select the known y's here. The y's are the Apple stock. Well, I want to explain the Apple stock as a function of the S&P price. So I'm going to select the S&P price here, and here you can see it is 60.27%. So this tells us that the 60.2% variability in the Apple stock price can be explained by the S&P 500 price index. So that means S&P 500 price is a good predictor of how the Apple stock will behave, because 60.2% of the variability can be explained. Now let us find the slope. This will tell us that how much increase for a unit of the S&P 5 index will affect the Apple stock. So let me do this first, and then I'll explain it more better. So I'll say slope, again the known y's here, comma, and let us take the known x's, which is the S&P 500 price index. Okay, so here we can see it is 1.25. So for every percentage increase in the S&P 500 price, the Apple stock is likely to increase by 1.25%. We saw there was a strong positive correlation. So for every percent increase in the S&P 500 index, the Apple stock will increase by 1.25%. So that's a good predictor. And now let us find the y-intercept. Now what does the y-intercept tell us? Say the S&P 500 index is flat. There is 0% increase in the S&P 500 index. What will be the increase in the Apple price? Will it increase or decrease, or what will be the value? So let us find that. Again, the known y's, we'll find the Apple stock here, and now the known x's, let us find the S&P 500. Okay, this again gives us a good indicator. I'll close. So here we can see, let us do this in percentage. So we can see here, and let us get the decimal point. So when the S&P 500 index is flat, or there's a 0% increase, the Apple stock is likely to increase by 1.04%. So this shows a good indication of your data, and you can see that this, it can also be modeled by a simple linear regression model. Let us try to do one more thing and represent this graphically. So you can understand this more here. I've select the data, go to insert, and go to charts. I'm going to select the scatter plot. And here you can see this is my Apple stock, and here you can see the x-axis will be the S&P price index percentage, and here's the Apple stock. We can see there's a clear linear relationship, and which shows that with the increase in the S&P 500 price index, the Apple stock is increasing. Let us do one last thing and create a trend line. So we can see this is my linear regression model. And one more thing we can do, let us click on this and click on the display equation on chart and display the R squared value. This is nothing but the values that we have calculated here. So this will give you your model in case you want to predict the Apple price as a part of its benchmark, or as a function of the benchmark. So you have, this is your model, which you can see 1.2564 we have calculated as the slope. plus the y-intercept here, 0.01 or 1.04%. And the r squared, which would tell us is 0.0627, which would tell us that how good this line fits the data, and it's pretty good. That means 60% of the variability can be explained, of the Apple stock can be explained by the S&P 500 price index. I hope you like this video. If you did like this video, I would be interested to hear from you. So do leave comments on any other videos you want me to make in Excel or Python on any other topic. I will do that. And do leave a like on the video, and do not forget to subscribe to my channel. Thank you.